Okay. Takaful model. Okay. Basically, not all Takaful operators adopted or works on the same model. So it is based on their business model. Okay, so business model in Takaful. Okay, some Takaful operator, they only concentrate on investment. So they adopt mudarabah models. Because mudarabah is investment based lah, partnership between the fund provider, which is the participant, and then the mudarib is Takaful. Okay, we compare with the banking business. Basically, fund provider is the bank. Okay, if let's say the banks give financing to the customer, so fund provider is the bank, and then the customer will become mudarib or the entrepreneur that use the money given by the bank to start new business or to extend the business. Okay, but in Takaful, okay, when the Takaful operator adopt a mudarabah model, it means that the fund basically coming from the participant. So the Takaful operator become mudarib or entrepreneur that utilize the fund for investment. Okay, let's say the Takaful operator concentrate on agency, become agents on behalf of the customer. So basically they adopt a wakalah contract. So wakalah means agents contract. Okay, so there are four models of Takaful. The first model that is practiced by the first Takaful operator in Malaysia is a mudarabah model. Okay, and then the second one is mudarabah and wakalah model. Mudarabah, wakalah model. Elements of investment and elements of agency. Okay, and then this one wakalah, and then after that wakalah model only, no elements of investment, and then after that there is elements of wakaf. Okay, where the participant comes contribute, the fund given by them is in terms of wakaf fund. Okay, wakaf. So the Takaful operator in this case become agents or through wakalah contracts to distribute the fund or to manage the fund, to manage the wakaf fund. Okay. But nowadays, I think none of the Takaful operator adopt this model lah, the last model, wakalah and wakaf model. Why? Because the wakaf, the elements of wakaf itself will attract the power of the Islamic Religious Council, because wakaf is under their control. Okay, so when the Takaful fund to be named as wakaf fund, so there will be collaborations lah. The Majlis Agama Islam will come and then to manage this fund. Okay, so anything with regards to zakat, to wakaf, it is under their control. Okay, based on the enactment, the state enactment. Okay, so the first, we will discuss model by model. Okay, the first model, which is mudarabah model, practice the principle of mudarabah. Okay, so what is the principle of mudarabah? Principle of mudarabah means a partnership contract. Mudarabah and musyarakah is partnership contracts. Okay, so mudarabah is partnership contract whereby one party provide capital and the other party provide expertise or becomes investment manager. Okay, and then the profit that is generated from the business or the partnership here will be distributed among the partners based on the pre-agreed ratio. Okay, whereby if there is a loss in the business, it will be borne by the capital provider. Why? Because they are the one that provide the capital. Okay, let's say the business need 100k. Okay, so the capital 100k is coming from one party only. So it's the other party the second business partner will use this 100k to start the business. Okay. So compared to musyarakah is both partners. 50-50, for example, both partner, one partner provide 50k and the other partner provide 50k. So they have 100k of business capital and then both of them run the business. But in Mudarabah model, only one party, one partner will run the business. Okay. So how about in Takaful? Okay. So in Takaful, when Mudarabah model is adopted, so the participant here will becomes tak ada kat sini Okay, the participant here because they bring money, they want to contribute into the Takaful fund, they become a Rabbul Mal. Rabbul Mal means the owner of the capital. Okay, the fund provider. And the Takaful operator here will become manager, fund manager or entrepreneur. Okay, investment from profit from the investments will be divided among them lah, among the participant and the Takaful operator based on pre-agreed profit sharing ratio. Profit sharing ratio. If there is loss from the investment, it will be borne by the participant. Okay. So that's Mudarabah model. And okay, now we will discuss Mudarabah model for because I think last 2 weeks or last 3 weeks we have discussed about Takaful business. There are two types of Takaful business if you can recall. Okay, there are general business and also family Takaful business. What is general business? The Takaful business that cover short-term period of risk coverage. For example, vehicles and fire. Usually less than 1 year. Okay. And then family Takaful cover family, cover life. Okay. So we will go one by one. Pure Mudarabah model for general Takaful. Okay, now this is Mudarabah model. Okay, Mudarabah model. Profit sharing here. Okay. And general Takaful, why general Takaful? Because the fund here, only one fund, general Takaful fund. Okay, because it is short term, general Takaful fund. Okay, if family Takaful fund, there will be two accounts here. Okay, participant account and participant special account. So this is Mudarabah model for family Takaful. Okay. Okay, go back to the general Takaful. General Takaful fund here because no elements of saving. So this fund is basically called as a risk fund. When the risk happen, the Takaful operator will use this fund to pay for the risk, for the claim lah. Okay, why we call it as a pure Mudarabah model? Because of this. What is this? Underwriting surplus. Anyone know what is underwriting surplus?
Don't know, Doktor.
Tak tahu ya? Okay, so underwriting surplus is basically the surplus from underwriting activities. Underwriting activities happen here. What is underwriting activities? Underwriting activities is activities that cater for the risk protection. Okay, like here, when the Takaful participant, they pay the contribution will be lump here. Okay, so when throughout the year, so there are many cases will happen, and then whereby the participant will submit claims, will report any case, any risk, submit claim. At the end of the year, Takaful operator will calculate what is the balance of this fund. Okay, so underwriting activities is the activities of underwrite the risk of the participant, cover the risk lah. Okay, pay for the losses. So at end of year, the Takaful operator will accumulate what's the balance of this fund. So how they accumulate it? Whatever the fund that they receive, okay, total of this fund minus total claim for the year, minus administration's expenses, minus reservations at Bank Negara, and also minus any re-takaful payment. Okay, so because later on takaful operator need to subscribe to re-takaful to protect this fund actually. So to subscribe to re-takaful, they need to pay contributions like a participant pay contribution here. Okay, so payment for the contribution lah. So minus all those expenses, the balance we call underwriting surplus. The surplus lah from the underwriting activities. Okay, so what do you think? Who should receive the surplus? The surplus is belong to whom? Is it belong
Participant.
participant kan? Because the fund coming from them, not the takaful operator fund. Okay. So that is what we call pure. Or originally, the underwriting surplus will be given by the participant.
Oh,
Uh,
so the underwriting surplus only applicable in general takaful, not family
uh,
takaful.
no, it's basically applicable to both general
Okay.
and family takaful.
Is this
Okay.
the
Hmm.
one of the benefit in takaful because got underwriting surplus, whereas conventional don't have?
I think conventional also have, but the
Oh,
underwriting surplus here there will be underwriting surplus, but in conventional insurance, the underwriting surplus is belong to them.
all
Because
right.
in Takaful, this fund is belong to the participant. The Takaful operator become a trustee. We recall back whatever that we discussed. Okay, in general, in conventional insurance, this fund, the insurance fund here in the middle here, is belong to the company because it based on buy and sell contract. Okay, the price of the premium is belong to the conventional insurance company because they sell the protection, the policy, and then it is bought by the policy holder. So the premium money fund that given to the conventional insurance is 100% belong to them. So they also at the end of the year they calculate whatever balance on their risk fund, but that balance is belong to them. Okay, but in Takaful, it's belong to the participant because Takaful operator is a trustee only. Okay, yes, any question?
So doctor, you mean that in Takaful, the
Ah,
Takaful participant, they will get protection and also underwriting surplus if there is any in that time.
ah yes.
But in conventional insurance, they
Hmm.
just get protection without
Hmm.
without any
Yes.
underwriting. Okay.
Yeah, because basically it depends on the discretions of the conventional insurance the company itself. If they want to give, then it's up to them. Okay, maybe they give it as a maybe cash bonus or non-claim bonus, non-claims cash because the maybe the policyholder do not claims anything at all for the year or for the 5 years. They give them bonus just for the to attract them to sustain or to remain with them. Okay. So even for the Takaful, if you can observe their marketing part, sometimes they give promotions like non-claim bonus also. That non-claim bonus is basically the underwriting surplus that they get from the fund itself. Okay, they want to give to the participant. There are many ways how they distribute this underwriting surplus. Case some of the takaful operator they only give the surplus to those who did not make any claim for that year. Okay, and then some takaful operator only give uh, the surplus here to those who have made claim, but their claim is less than their contributions. If their claim is more than the contribution they have made, so they will not share the surplus to them. It is to be fair to all lah. Okay. Okay, so this model we call pure mudarabah model. Later on, you will see there is a modified mudarabah model. So PO and modify is basically in terms of the underwriting surplus here. Okay, why it is called modify, we'll discuss later. Okay, so as for now, you just need to understand the Mudarabah model is like that, whereby the Takaful participant, they give contributions as this fund is managed by Takaful operator for the investment. If there is any profit, it will be shared to them. And general Takaful, one account here. Okay, so let's proceed with the family Takaful for Mudarabah model and PO. PO Mudarabah model is underwriting surplus is returned back to the participant, and then family Takaful means for long term protections whereby the elements of saving and investment is suitable to be offered because long term maturity. Okay, and then they will be for sure there is a risk fund here. This is risk fund. Risk fund is usually based on tabaruk principle lah, same with the general takaful here. This is based on tabaruk principle, this risk fund. Okay. Okay, so what is PA? PA is participant account, participant individual account. Okay, participant special account, PSA, participant special accounts or risk fund or tabaruk fund, same here. Okay, so this is the individual account, like we have accounts at bank, we have investment account. So individual account, and this one general accounts from the participant. This fund belong to individual participant and this fund belong to all participant. Okay. Okay, so basically the Takaful operator will make investment from both of this fund lah. PA make investment and PSA make investment, any profit will be shared uh, through this one lah. If profit from investment, it shared to individual account. If profit is achieved, or there is profit from the tabaruk fund, the risk fund here, basically they will put into this fund. Okay, not share with they share the profit with this fund lah, because this fund is belong to all. So it is about the same. To sustain the fund, they will share the profit. Takaful operator and the risk fund, and this one Takaful operator with the individual participant account. Okay, why? Because the total of saving and investment here is difference among the participant. Okay, if they want to make more investment, they will have a high profit later on. Okay, so pure mudarabah model means the underwriting surplus is returned back to the participant because they are the owner of the fund. Okay, so this is a family takaful because two account. Any questions so far? Okay, now, okay, question?
No.
No question, eh? Okay, now we go to modified mudarabah model. Why it is modified? Because of now, Takaful operator, they ask permission from the bank negara to share the underwriting surplus. Because to sustain, to make them to compete with the conventional one, they want to get maybe more profit. So that is why they ask permissions from the bank negara to share the underwriting surplus. Okay, now it is practiced in the market. The underwriting surplus is shared between Takaful operator and Takaful participant. Okay. So no more PO model. They will be modified mudarabah model. One fund for general Takaful, and then profit will be distributed based on profit sharing ratio between the participant and Takaful operator. Okay, and then the underwriting surplus is shared between them. So Takaful operator can generate more profit later on. Because if there is no sharing on the underwriting surplus, Takaful operator can only make a profit from the sharing, profit sharing, only from profit sharing. Okay, no profit can be generated from this fund. This fund only can pay for the expenses, administrative expenses. Okay, so they can't generate a profit to sustain in the industry. That is why to attract more Takaful operator to offer Takaful product in Malaysia, the Central Bank of Malaysia allow the Takaful operator to share the underwriting surplus. But however, this one is not agreed by the Middle East scholars lah. Okay, there are basically three opinion to discuss about the sharing of underwriting surplus. First opinion is basically do not allow both participant and Takaful operator to share the underwriting surplus. Why? They are in a view that this underwriting surplus that coming from this is already donated by the participant. So whatever that we have donated, we do not have right to receive it back. So no participant or the Takaful operator have right to share the underwriting surplus. That's the first opinion, the strict opinion lah, the strictest opinion. And then the second opinion is the underwriting surplus is can be given to the participant. Okay, why? Because that surplus coming from the fund and the fund is belong to them. Okay, and then the third opinion is underwriting surplus can be shared. That's the Malaysian scholars, apa scholars in the financial industry or the central banks are in opinion that the underwriting surplus can be shared between participant and the Takaful operator. But it is, I think, for temporary only to attract or to attract a new Takaful operator and also to be competitive with the conventional one. But until now, because the number of Takaful operator is not increasing exponentially, tak banyak sangat, still about 10, 11 kan, not 20 or 30 operators. This practice is sustained lah until now. Okay. Okay, so that is why now we call modified. And then now modified mudarabah model for family Takaful. So family Takaful, it's based on the two types of accounts here, participant accounts and participant special account. And then why modified? Because the underwriting surplus is shared between them, the participants and Takaful operator. Okay. Okay, now this one, the issue of the modified Mudarabah model that I have mentioned. This one, the Middle East accounting standard or fee on Takaful does not allow Takaful operator to share the underwriting surplus. Okay. And then now we go to Wakalah model. Okay. So what is Wakalah? Wakalah is agency model. Okay. So there will be agency agreement between Takaful operator and the participant. And then Takaful operator become agents or wakil on behalf of the participants and will receive agency fee. So more profit to them. Will receive agency fee, and then the wakala or agency fee is charged upfront before the fund is segregated to risk fund and participant account. And then agency fee, which consists of agency commissions and administration expenses, will be channeled to the Takaful operator. Okay, let's look at the mechanism here. Okay, when you see there is a deductions of fee here, the agency fee here, it means it is wakalah contract. Okay, if there is no deductions of agency fee here, it means it is mudarabah model. Okay, so this is pure. Why? Why we call this model is pure?
Because the participant get full underwriting surplus.
Because the underwriting surplus. When it is modified, then it will be shared between them. So, okay, let me just give example. Let's say the participant need to pay contributions 100 ringgit monthly. So they will come or they will give 100 ringgit to the agents or monthly deductions, and then that 100 ringgit is not straight away put into general takaful fund here or risk fund. There will be deductions on the agency fee. Okay, and then the percentage of agency fee here usually 30%, 40%, and then the highest is 60%. Okay, if let's say the participant pay 100 ringgit, so 40 ringgit will be deducted for the agency fee here. Okay, so what's the purpose of agency fee here? It is not 100% become profit to the takaful operator. There will be items under agency fee here. Okay, and then certain takaful operator, they make it, let's say, to administrative fee under agency fee. Okay, from 40% agency fee here, 10% administrative fee, 10% for retakaful. Okay, sometimes they deduct the retakaful throughout in the agency fee, not in here. Okay, they deduct first retakaful fee, and then marketing fee, something like that. Okay, and then they will get profit 10%. Okay, so when they want to impose any agency fee to any product that they want to propose, they have to submit their proposal and they have to justify why they want to charge for 40%, 50%. It is for what? Okay, it is not solely for to get more profit. Okay, so because this fee is meant for agency works. What is the work? What their jobs? That they entitled them to get the fee here, 40%, 50%. Okay, and then the balance, let's say 100 ringgit minus 40 ringgit, so 60 ringgit is balance, will be channeled into the risk fund here. So risk fund here will be invested by takaful operator. So any profit from the investment will be channeled back to the takaful fund here. Okay, for general takaful. Okay, for family takaful, the investment here will be given back to the individual participant if let's say the participant have make any saving and investment. Okay, and then uh, um okay, nak cakap tadi. So this is a family takaful because of these two accounts. Okay, and then because there are varieties of takaful, family takaful products, not all products will offer saving and investment. Only certain products will offer saving and investment, like takaful for education. So saving for future education and investment elements. And then let's say personal accidents, no elements of saving, only elements of maybe investment, or nothing at all for saving investment, only one here. Okay, uh, and then let's say takaful hajj takaful, so there will be a saving element for hajj, or investment link takaful, no saving but only investment element is offered. Okay, so whatever the product that offer, the necessary part is here, this accounts, which is a risk account lah, risk fund account, participant special accounts. Why? Because of that's the purpose of the takaful products, to cater for the pure risk like a death benefit, like accident benefit. So that's the main purpose. If they want to offer saving and investment, is the second purpose of takaful. Okay, because people can seek any apa or other alternative to make a saving, like at banks, investment for investment bank or investment institutions, like a mutual fund, apa namanya, public mutual, that's solely investment firm, isn't it? Okay, but nowadays takaful offer that elements. Okay, just additional benefits to the takaful participant. Let's say nothing happened to them that give them right to claim from this fund, at least they have a balance under their personal accounts. They have balance on the saving and investment when their certificate expired. Okay, because it is long term maturity. So long term saving for sure will benefit the participant and investment too. Okay, so this is a pure wakalah model. Pure in terms of the sharing of underwriting surplus. Wakalah model we can see from the deductions of agency fee here. And family takaful we can see from the number of accounts. Participant accounts and participant special account. Very easy, isn't it? Okay, any questions so far?
No.
Okay. So now modify. So we have a modified wakalah model for general takaful and we also have modified wakalah model for family takaful. So the rest are same. So modify in terms of underwriting surplus here. Shared between the participants and takaful operator. Okay, general takaful is because of this one general takaful fund only. Wakalah model is in terms of deductions upfront fee for agency works. Okay. Overall, the contracts adopted is still tabaruk contract, which is donation contract. Okay, so modify here, wakalah here, agency fee, family takaful here. Okay, 3 parts. That is important. 3 parts. Agent modified, wakalah and family takaful. If no deduction here means that modified, mudarabah, family takaful. If deductions for agency fee here, wakalah, model. Okay, get it? Okay, now hybrid, wakalah and mudarabah. Where there is a wakalah elements of agency and mudarabah elements of investment. Okay, basically even wakalah models, there is investment elements because takaful operator usually will make investment. But which part that they want to stress? If wakalah and mudarabah model, basically they want to stress on the agency and mudarabah model. Okay, the investment part. So the hybrid model, no pure for hybrid model. When it is hybrid between wakalah and mudarabah, meaning that it's already modified. That is the current model. It is already modified whereby the underwriting surplus is shared between the participant and takaful operator. Okay. Okay, so this one hybrid wakalah mudarabah model for family takaful because there are 2 funds here. Okay. So far, what do you think? The current, most of the takaful operator adopt which model? Which model you think is practiced?
We took the hybrid one, hybrid wakalah mudarabah.
Yeah, hybrid wakalah.
Uh, yes, we can see. If in the theory, we can see they practice agency model or wakalah model and also they offer the elements of investment. Kan? But what I can observe here, even though there is elements on the investment made by the takaful operator, they most of them disclose that they basically adopt a wakalah model. Okay, maybe after this you can just open their website and then read what types of model that they adopt. Okay, but based on my limited knowledge, I observed that most of them disclose that they are practicing wakalah model. Why? Because if let's say they adopt a wakalah and mudarabah, they need to disclose the profit sharing ratio to the participants. Okay, profit sharing ratio to the participant. Let's say especially it's very hard for the general takaful like this whereby the participant do not know that the Takaful operator basically invest their fund. They just need to have protections. So let's say the Takaful operators inform them there is a profit sharing ratio that you agreed with us. What do you think will happen? They will ask for the profit sharing later on. Okay, whereby in this case, if for the mudarabah model, okay, wakalah and mudarabah model, even though the takaful operator invest their fund here, the profit will be shared with this fund. Because for the short terms, it is very hard for the takaful operator to share the profit with the individual participant. They just share with their fund, shared with this. So if wakalah principle is adopted, the Takaful operator doesn't need to disclose the profit sharing ratio. Whatever profit that they get from the Takaful investment of the general Takaful fund here, they will share, but the percentage of profit is depends on them. Okay, so most of them just prefer wakalah model. Why? They act as a wakil uh, on behalf of the participant, wakil to manage the takaful fund, wakil to pay for the claims, or agents to do everything with regard the takaful fund, which including the investment. Okay, so to avoid from the issue of profit sharing under mudarabah contracts later on, so that is why they simply adopt a wakalah model. Okay, I think not all the scholars agree with this lah, because they make investment, then the profit share, it depends on them. How many profit they want to share with the fund here, it is up to them. But even though it's up to them, the profit that shared will be presented to the Bank Negara Malaysia. Okay, Bank Negara and the Syariah Committee usually will observe whether they are practicing fair enough to the participant or to the risk fund here in terms of investment, because they doesn't need to disclose their profit sharing ratio to the participant based on the wakalah model that they adopted. Okay, understand?
Yes, yes. Understand.
Ah, okay.
Yes.
So to eliminate any issue later on, so wakala, so as agents, they are entrusted to do everything on behalf of the participant, which including the investment. But the investment element is there. Basically, they need to disclose lah that they are making investment and share having a profit from the investment, and need to share the profit from the investment to the participant. Okay, but certain Takaful product which is investment link Takaful, whereby the product is mainly for investment, on top of their coverage for the death benefit, critical illness, total permanent disability. So let's say the Takaful participant, they pay RM500, RM100 for the risk coverage, RM400 for investment. They pay heavily on the investment part. So in that case, the Takaful operator basically will inform them the profit rates that they will receive lah, the historical rate that they pay to the other investor. It's considered as investor lah. Takaful product for investment linked takaful. So that have a different treatment. Okay. Okay, so now wakalah and wakaf model, where the wakaf element is there. What is wakaf? Wakaf is if things which are intact in them and yet produce an income product that serve charitable purpose. So now the fund that contributed by the participants will be treated as wakaf. So wakaf fund. So that wakaf fund should be for charitable purpose, for helping and assist others who are in need. Okay? So based on the wakaf principle, the properties after being declared as wakaf no longer remain in the ownership of the donor. So now the ownership is in Allah, the God. Eh? So wakaf model operates as a public foundations, and underwriting surplus cannot be distributed to anybody because now the ownership is no longer belong to the peoples. It's belong to the God. So it remains as wakaf fund. It's based on the God discretions. That fund must be given to the needy, which means not only the takaful participants but to the whole community or society. That is why when wakaf element is to be practiced in takaful, it will bring issue lah, lot of issues, because wakaf is belong to God and God wanted to help anybody. Eh? And then takaful operator, when they adopt this wakaf model, they will still receive wakalah fee because they act as agents. Okay, and then because of the management of the wakaf fund. So let's see the mechanisms of the wakaf model. The participant here, they pay the fund here in terms of wakaf fund. Wakaf contract, no longer tabaruk contract or donation contract. So underwriting surplus should be channeled back to the fund because this fund is no belong to the participants or takaful operator or nobody. And then underwriting surplus should be returned back to this fund, and then initial donation to create the wakaf should be coming from the takaful operator lah as a capital for the wakaf fund. And then based on the wakaf principle also, when the fund become wakaf fund, the principal fund should be maintained in the accounts. Only the profit generated from this fund can be utilized to help the needy. Let's say takaful participant pay and then the other participant pay at the end of the year, the principal payment is, let's say, 100k. So when anything happens to any one of them, this 100k cannot be utilized. Okay, so 100k will be invested by takaful operator. Let's say the principal is 100k and then investment profit is 50k. Only 50k can be utilized to help the needy who are in need. And the needy here, based on the pure or original wakaf fund, a wakaf principle, the needy here not necessarily be among the participant. It can be the public. So it will be a risky lah if it is adopted in takaful. So investment profit will be returned back to the wakaf fund because it is not owned by the participant, cannot share with the participant, but it can share with the takaful operator. Maybe takaful operator can adopt mudarabah principle, profit sharing, so they get a portion of the profit to maintain their business. Okay, so agency fee here paid to the takaful operator. Okay, as I know, previously one of the takaful operator adopt the wakaf model, but they do not practice in this way. They do not practice in this way. What they practice was, here this fund is still tabaruk fund. Okay, tabaruk fund, but wakaf is happens later on when something happens to the participant here. The benefit, like say when the participant die, the death benefits is given in terms of wakaf to the wakaf body, to the orphanage house. Okay, so in this case, the participant pay contribution tabaruk, but they stated in the nomination form, they inform the takaful operator, in case of anything happen to me, let's say I die, so the death benefit will be given to this body in terms of wakaf. I want to make a wakaf, or they entrust the takaful operator to buy a specific land to become a wakaf land. So wakaf element or wakaf principle is exercised later on if something happens to the participant. Okay, or they want to make hibah. 1/3 of the benefit or 1/3 of my savings I need to give as wakaf charity to certain people or to certain body, like say. Okay, so it happened at the end, not at the initial part like this. This one at the initial part lah, they just give contribution. That contributions directly or automatically become a wakaf fund. Okay, so that's all for the wakalah wakaf model. Okay, what happened this one? Okay, this one for another model. This one model, let's say the flood victims. I just give example lah from my research basically. Okay, this one, the flood victims. This is a wakaf fund. The apa Okay, so this wakaf fund is a portions of it the flood victims will pay, let's say very small portion. Maybe we can call this as a micro takaful. Maybe the flood victims among the villages just pay 10 ringgit, because at the end of the day when the flood happens to them, they will get protection from this fund. So they need to pay maybe 10 ringgit or 5 ringgit monthly, or maybe 10 ringgit yearly. So the other fund is contributed by the government, maybe by the NGO body, because when the flood happened, so many parties wanted to contribute, isn't it? So their contribution will be channeled into wakaf fund, and this wakaf fund is managed by the Takaful operator. So Takaful operator will make investment on the wakaf fund. Investment from the profit will be profit from the investment will be channeled back to the wakaf fund, and then in case there are excess of the wakaf fund, it can be used to buy the wakaf asset. Or if there is NGO wanted to give a land as a wakaf, so they will become a wakaf asset, and this wakaf asset is managed by wakaf institutions. So in Malaysia, there will be special institutions, wakaf institutions that will manage assets of wakaf. Okay, so in Malaysia also, every state will have a special institutions. Basically, these institutions under Islamic Religious Council, they manage specifically on the wakaf asset, regardless of cash wakaf or the physical wakaf asset. Okay, so any asset will be managed by this institution. Any fund from this managed by the Takaful operator, so all the profit will be returned back to this wakaf fund. If in case anything happens to the victims here, flood happen, like say nowadays, there's the monsoon season, the floods may be expected to happen. Okay, so we can use this wakaf funds to pay for any losses that happens to the victim. Okay, so I think this is from my own research. Okay, so that's all for the Takaful model. Any question?
No.
No question. Clear tak?
Yeah, it's quite clear.
Alhamdulillah. Okay, we start 2:30. Okay lah. I think can we just stop our class here, or you want to proceed with the next topic, Takaful?
Can just stop here.
Okay. Okay, we stop here. So next class is your midterm, and then maybe after midterm we will continue with Takaful. If let's say the midterm is not too heavy for you, if we can proceed with the next topic, then we can just proceed. Maybe you can inform me after the midterm later on. Okay.
So during the midterm, we just do it on the Google Classroom, right? We don't have to like have the online class, right?
Okay. No. Yes. It is in the Google Classroom. I will prepare online questions. You submit in the Google Classroom too.
Okay.
No need to, I think no need to download the question. So just fill up the answer online and then return back your answer to the specific account, okay, to the Google Classroom. And then after, let's say our midterm is at 2:30. So 2:30, 3:50 at 4, kan? So 1.5 hour for your midterms. So at 4, I will conduct online class. Then we will see whether you want to proceed or we want to discuss the midterm exam, the midterm questions also can.
Okay, doctor.
Okay? Okay. So no questions. I think that's all for today. Okay.